Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everyone. Welcome to this Friday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick on the show today. We're going to talk about the preliminary results of the first round, or I guess the final results of the first round of the stress test, who did well, who did not. Going to talk about, we have that OPEC meeting today. It seems like Saudi Arabia and Russia are going to set the tone there. We're going to talk about what that means for the overall market and kind of the general sentiment, how we could have the eighth down day in a row today. Individual movers on our radar, a couple earnings, couple ratings we want to discuss, and we'll take your questions in our chat as well. Joel, tell us what the S&P futures have done overnight.
Yesterday never happened, Spencer. We are up 14.25 points. That was our eighth down day in a row. Cannot be 9. We're trading up 14.25 handles at 27.67. Oh, 27.67 even here, right at the highs of the session. Keeping an eye on the intraday high from yesterday at 70.50 and Wednesday's close at 72. Moving on, crude's trading up 94 cents at 66.48. The whole world waiting to hear what the final decision on the OPEC meeting is. Gold up 90 cents at 1271.40. Silver in the green by 9 cents. And to make Dennis happy, Bitcoin, which I want to talk about here with Dennis, is trading down. We are in the red, $370 at 6,355. Triple D, how you doing today?
What are we? 6,365. What's the low of the move?
Oh, it's right. Oh,
We're knocking on the door. Knocking on. Not heaven's door in this case. Knocking on hell's door for Bitcoin.
61.35. I mean, that's
6,000. We get below 6,000, and there's going to be a few more hodlers not hodling anymore.
Oh my gosh! Remember, I talked about the 67, 6,800 level yesterday. 1, 2, 3, 4, 5, 6, 7th high in a row, right around 6,700. So there's absolutely, it might be time for a Bitcoin article, Dennis, because this is a very important technical day for that. You could break down, take out 6,000, take out 5,000, take out 4,000. Who knows where this thing could go? $2,000. Who knows? $1,000 doesn't have any value according to you. So maybe could Bitcoin go to zero theoretically?
You know what? I think there is some value. There's no intrinsic value because it doesn't produce cash flows. It doesn't give you dividends. There's nothing there to value. But, there is that value of, potential, well, they say store of value, but as a potential transaction. I mean, I don't know. That's always, I've been skeptical all the way up, all the way down. The only thing I could say is I can see some value in some cryptocurrency in countries that don't have stable currencies themselves. So think about like some of these third world countries, where they have rampant inflation, where the currencies just aren't stable. Something like a cryptocurrency could come in, and actually replace, their unstable currencies. Could it be Bitcoin? Could it be Bitcoin Cash? Could it be one of these other ones? I don't know. That's why I'm not playing it at all. I think there is some value for these things somewhere. But to say these are going to be, what we use and it's going to replace the US dollar and it's going to, have a market cap of $10 trillion within 10 years, I personally think it's all nonsense.
All right, keeping an eye on 6,000 here, another big wave of selling. If it does take out, I'm more comfortable just saying that there's no big rally coming until this thing clears 6,800, 7,000. I mean, you got all those highs in that area. You had the big gap down. Well, it wasn't a gap because, the actual currency was open, but it's just ugly. But let's move on to stock here.
Stat from the chat, first of all, 169. The Dow falls today, and I'm not sure, I haven't verified the stat, but Hunter, I hope you did, because we're giving it live on the show. It will be the index. So if the Dow falls today, it's already fallen for what, 8 days in a row? 8 straight days?
Yes.
If the Dow falls today, it will be the index's longest losing streak in 40 years. That right? That's incredible. It doesn't seem like enough. But if that's right, 9 days. Remember Bueller? 9 times the Dow falls. 9 times.
It won't happen, but you're called for it though, Dennis. You kind of, I mean, 15 points is a big.
I was calling a pre-market show, and I think well, obviously, I'm really in the hole if I'm going to call. We're going to be down here today, but there's the possibility that this rally could get sold. And why is that? It's all about just looking for the evidence and, what you think the path of least resistance is going to be for the day. I do this on a daily basis. I try to get a feel for whether I think, the sellers are coming in or not. There's a few reasons why I think this rally could be sold. And it's the jury is out on this rally here this morning. It's a nice rally. Oil, obviously, a driver here this morning. We've got oil up significantly. So that's good news. But the tech had its first day in a long time where it really kind of, had a little whoosh there yesterday, where they hit some of the high flying momos. They've been hitting the little stuff like the IQs and the HYA for a couple days here now. But the higher flying ones, they hit those a little bit yesterday. And it wasn't like a lot. It was just a little bit there. But if you look, you've got some really bad red hat numbers overnight. Last night, tech was trading down on that. Today is still trading down. You got stocks like Microsoft that are actually in the red because of red hat. But if you look at some of the other high flyers, like Amazon had a rough day yesterday. Google had a rough day yesterday. So what happens is people who were just thinking these things are going up forever, all of a sudden, on Google, they were buying at 1,200 just 2 days ago. Now it's 1,170. So as it comes up, you have a few of those people who are like, oh, maybe I was wrong. I better sell. So it's not as clear sailing here now. So that's why, we always say, where we look at is, overhead supply underneath demand. I think you got a little bit of short-term overhead supply here right now. I'm still full on the bull train. I've been on the bull train here, I feel like, for years now. But I think, short-term, if we set up here that this rally could actually get faded. I'm not saying it's going to. I'm saying it could. So be careful chasing the stocks up here this morning.
Okay. Big level to take a look at, 627.66. We mentioned that yesterday. That's mid-range from that break that we had from 96 to 35.75. But Dennis, we got a great question in the chat. And first of all, I want to say happy birthday to Abner's boy. I think Abner's, Abner is I think it's the dog. Is his dog, and boy is what he goes by. But he says his question is, will someone answer a dumb question? No question is a dumb question on this show. First of all, how do I get
questions all the time?
How do I get access to after hours trading? And it really depends on your platform, right, Dennis?
Carry it now. Most of your platforms do carry it. So it depends on, who you're trading with. Obviously, IB, TD Ameritrade, all the big guns have access to after hours trading. And most of them have the trading capabilities too. You might have to sign an extra form or something, depending on your broker. But for the most part, most of your brokers carry that information. If they don't, and you're just looking for like some free online sources, your best source is the Benzinga Pro. You have a scanner built into your Benzinga Pro that will show you all of your after hours movements.
I think he means to actually place trades, though.
Yeah, Dennis, and they don't have live quotes.
Right. So. I think he means
Benzinga Pro shows you all, though, on their scanner. They show you all the live movers.
But you can't you can't place trades. He's asking, how does he place trades? So
it's through your broker.
Right.
So I know
call them up.
If you're an interactive brokers, I know you've just got to click. There's a little button that says outside like real trading hours or something. I think it's RTH. So you click that, and then the trade will go in. TD Ameritrade, I don't know, Joel, do you know how to place the after hours?
Yeah, EXT, but you know what? You really got to check because some only let you trade until 6 o'clock. Some don't even, some don't let you trade till 8 o'clock.
And some might not start.
Yeah,
some might not start.
It's fair. It's different across the platforms, but
it depends on your broker. I mean, there's extra risk. Trading a pre-market after hours is absolutely no doubt about it. And some of your brokers don't want to take on that risk that all of a sudden you're in some in some news stock and it's moving down, 20, 30% and you were margined up. And all of a sudden, you're in a situation where you could potentially blow out your account, then they got to try to come back after you for the money. And that's not going to be easy for them to do. So that's why a lot of them are gun shy because liquidity drops by exponential levels after hours. It's probably like 99% of your liquidity goes away. You can look at some stocks, they don't even have a bid or an offer after hours. Like I would say the majority of your smaller stocks, if you bring them up after hours, sometimes do not have a bid and do not have an offer. There's nothing in there. So if you need to get out, or if you're making a trade, you make a really bad one. This is why if you are trading after hours, make sure, you know, you watch your handles very closely, because you could accidentally buy something in the wrong handle. The handle, if you just want to know what that is, if stock's at 60, 61, 62, those are your handles. It's not talking at that stuff before the decimal point. But, you know, you can make mistakes. Like I used to call them, you know, and it used to be a really dirty algorithm that ran. I used to call it the handler. And it would intentionally, like if the stock closes 64.09, it would offer at 65.09. And you think, oh, I'm buying the stock flat. Like, oh, I bought it $1 up. Well, it's over. I mean, you bought $1 up and you just lost a point probably on it. So if you thought you were buying 64.09, you're buying 65.09. You just have to be very careful when you're trading after hours to very much watch the price, because just because you see, you know, an offer there, you know, it could be way out. Some of these offers, you know, some of these markets are, you know, 10 points out. And now they used to bust trades, and they don't bust. I think it's like it's different stats for the different exchanges, but I think it's like you gotta be like 20% out for them to even look at it. So if you buy something like 7, 8, 10% out to lunch, you're just out that money. So you got to be very careful with after hours. Make sure you check your price very carefully, but most of your brokers will allow you to trade after hours.
And if you really want to compete against Dennis and, you know, the tough competition, but
I mean, we're trading news.
Yeah.
So
exactly.
I'm not trading something that isn't trading. I mean, we're going to where liquidity is. So we use our scanners. There's a good one in Benzinga Pro. Tell you all the stocks that are moving after hours. There will be more liquidity in the stocks that have news. You know, Bank of America always has. You know, if you go to the thicker ones like BAC, you got a 1 or 2 cent market. The SPY, you've got a 2 or 3 cent market. There's all the way till 8 o'clock. It's fairly, you know, tight market. The diamonds now, they can get wider at certain times, believe it or not. I've seen DIA, you know, 50 cents wide sometimes. So, but for the most part, some of your ETFs, they're actually, you know, there is a market in there if you want to get in out. That's why TD Ameritrade has their markets all the way overnight, I believe. You can even trade at midnight on some of these indices, because, like, for instance, the SPY, if, you know, the S&P futures are trading, well, they can comfortably, you know, their market makers can
hedge
the market in SPY, because they can hedge it with the E-mini. So they're comfortable doing that. Now, individual stocks, it's tricky. So that's why, you know, they do shut down at 8 p.m. on the exchanges. So and different exchanges open at different times too. Like ARCA and NASDAQ open at 4 a.m. But Edge and some of the other ones don't open until 7. So, you know, it is, you know, different in the morning. And then at night, they all close at 8 p.m. So basically, if you were trading the entire, you know, session in the U.S., it's 4 a.m. to 8 p.m.
All right, before we get into our regularly scheduled programming, BZ Tokyo is asking about a few pot stocks. Earlier in the week, the referendum was passed in Canada, Dennis. Was that a couple days ago that something passed in Canada? So
yeah, we talked about it, and there's been a run. And, you know, I thought it might be an instance of, like, you know, buy on rumor, sell on news. And they did buy them ahead of it, and they've continued to buy these pot stocks after the news here too. So we actually had the official date that the Prime Minister of Canada came out with, I believe, and don't quote me on this, going right from my goldfish memory, but I think he said October 17th is when pot will be actually legal in Ontario or in Canada. So there you go. Pot is going to be legal in Canada. It's kind of, I'm torn on this. What do you think about legalization of marijuana?
I think they should have done it a long time ago.
Yeah.
Yeah.
You know, I'm torn. So I get it, but I think they've definitely, you know, I get, you know, we did it with alcohol and it worked, and, you know, marijuana isn't killing anybody either. It's not like a really hard drug, so it's probably not a lot different than even alcohol. But, you know, I'm not a doctor, so I can't really say long-term effects on any of the stuff. But my only concern is, are you going to have, like, you know, when you're drinking a drink on the street, you have, you know, that person is the only person drinking the drink. But if you're smoking like marijuana on the street and there's, you know, kids walking through your cloud of marijuana smoke, can they potentially get stoned?
How is that different? How is that different than cigarettes, though, right?
Because they're not getting stoned from a cigarette. You're not, you know, getting, you know, your mind, you know, stoned. I just, you know, worry about that repercussions. Like, I think they need to regulate where you can do it, who is around when you can do it. I mean, they do that with tobacco to a certain extent too, but if you're just going to allow everybody to smoke pot outside, and, you know, and just for instance, you know, like in your hotel room, you know, they allow in your hotel room, and then you come onto your floor, and, you know, it stinks up a lot worse than typical tobacco smoke.
I mean, it could.
So,
it could. It also could not.
It actually, like, my, you know, I'm not saying, but I had a friend that was smoking marijuana, and, yeah, I don't get anybody in trouble here or anything, but he was saying he did it in his hotel room, and, you know, you come onto the hotel floor, and the whole floor smells like pot. I mean, it can really be strong. So when you smoke cigarettes in your hotel room, the whole floor,
you're not allowed to. Isn't like
they gotta have some
you're also
regulation
not
on all
allowed
that stuff, and that's maybe where you got to dot the i's, cross the t's. But I was just thinking the outdoor scenario where like standing outdoors, a bunch of people smoking marijuana. Maybe there's a kid, from a different family, standing nearby, and all of a sudden he's breathing in marijuana smoke. I don't like that idea. So I think they got to be very careful with where they allow it, how they allow it, and who can potentially unintentionally inhale it.
I think they are being careful. I think that's.
I would hope so.
So right now, it's heavily regulated how much you're allowed to have, how much you're allowed to, at least in America, how much you're allowed to grow in certain states, how much you're allowed to have on your person at any given time when you're outside your home. So that part is being watched closely. I think doesn't mean people don't break the law, but that part is being regulated. So
this canopy growth has been on fire, trading up 44 cents. Yeah, in the pre-market, boy, what a great performer, trading up. I mean, the only thing I could tell you from the pre-market trading, a little bit of a seller here, just under 36.50, 36.46 is your pre-market high. So you want to see continuation on that. If you wanted to protect some profits, the old-time closing high was 35.96. That's 50 cents away. So potential support there at the closing price. In Cron, this one, volatile stock, trading up 13 cents in the pre-market.
I don't follow this one at all.
Yeah, $8 is a big level in this. You had two highs, June 6, 793, and another one at 815. So
is
call
that
it $8.
A pure play, Cron?
I don't know. Kronos Group Inc.
I just went to the site. It's cultivating medical marijuana. So I think so. I guess it is.
Okay.
That's the one that I've heard of, but I've never followed that story close. The canopy growth in the Afria, because obviously it comes from in the hometown where I was born. So, I follow that one close. That's APHQF. Then there's Aurora Cannabis. There's a lot of these in Canada, but the CGC is the one that, is now listed in the U.S. So that's why it's talked about the most here, because it's actually got the formal listing here in the U.S. and it's traded, man. They trade the hell out of that CGC. So it's interesting to watch these stocks.
Okay. Let's go. Let's do a little earnings here. Not much after the close, but tech under pressure. What happened to Red Hat?
That's this morning. I'm sorry, that was after the close. Yeah, yesterday. Q1 EPS 72 cents versus a 69-cent estimate. Sales 813.5, $807.4 million was the estimate. So they beat the sales number, they beat the EPS number. The fiscal year sales guidance came in a little bit light, not by too much though. The EPS sales guidance came in line. The Q2 sales guidance was light by about $20 to $30 million. The Q2 EPS guidance light by 8 cents, 81 cents versus 89 cents. So downbeat on the Q2 guidance, in line on the fiscal year guidance, and a $1 billion buyback.
All right. So it's funny they bring in the $1 billion buyback because everything else wasn't that great. So we're like, we're cushioning with a buyback. Obviously, it's not working. So it's still down 13%. It's a big hit. They reported on the wrong day as well. Everything kind of like I was talking already earlier on the show, we had a little mini tech wreck there yesterday. So now you report after everybody's kind of got a sour taste in their mouth for tech. I think no matter what they report, it was going to go down. We're down 23 points. Can it bounce? Yeah. You know what? These things seem to always bounce eventually. And there is a lot of support down here in that whole 143, 144 area. Let's see what happens to the overall market, and that'll kind of dictate where Red Hat goes. I mean, if they continue to buy this market today, then we bounce. If the market starts to roll over, then you get concerned that this could continue to move lower.
This is really an interesting pre-market chart. You came down hard and got a buyer under 142 here. You have 1, 2, 3 brackets here where you had your lows from 141.40 to 141.60. So if you're looking to bring a short in, folks, that's the area that you want to keep an eye on. Longer it takes to get down there, boy, oh boy, you could get a little bit of a rally. I mean, down $23.
Bounce, but there's a lot of people caught in this.
Stock,
this is traded huge volume, so this isn't going to bounce right back. The dust settles. You look at this 3 months from now, does it come back? Probably. But there's going to be it's not just going to climb right back up here. I don't think this is one. And this is another thing about just learning, stocks and how they trade in volume. And, we don't talk a lot about volume on the show. But when you see a move and, down 23 points and it's traded like 1,000 shares or 2,000 shares, Well, it hasn't traded a lot at that, so there's not a lot of people who have bought and sold it at those prices there. So that means it could come back up with a little more relative ease. When you see a stock down 23 points, it's already traded 113,000 shares in the pre-market, probably traded 1 million shares last night, at below 150. It starts to get stuck down here at these prices because there's people who are buying it here, and as it goes up, they're going to sell it. And that just makes the stock a lot thicker, and it makes it tough to go back up. That's why stocks that are trading on heavy volume significantly down have a lot more difficult time coming back up. Sometimes they can come back up and get a fundamental catalyst, like the earnings come out, and then, on the call, they say something else. That's new fundamental information that could drive it to a new price. But other things being equal, without new information, the more volume that a stock trades at a certain price lower means it's more difficult for the stock to climb right back. So, and this is trading heavy volume down here. That's why I don't think this is coming right back.
Yeah, and just, statistical traders, program traders that are looking at this historical move. I mean, they're figuring they might be planning on buying stock from 140 to 143, and building a large position. And if it gets to 145, they're out. They could care less about the gap in the, in the stock, because you need to get all the way up to 164.91. And then you got all the people that bought yesterday, and just as the stock made a new all-time high. And now basically everyone that's bought since late March is underwater too. So no doubt there'll be some rip-roaring rallies here. But if it takes out that pre-market low and you got a nice position you're trying to cover, use your half and whole numbers. I mean, 140, could be a number. I don't have anything in the dailies going far that back. But also after the close, we had BlackBerry, or what's the name of it now? They
changed the name. It used to be Research in Motion, and then it was something else, and now it's just BlackBerry. Double B.
Yeah, it's BB, and that was this morning, and they had the Q1 EPS 3 cents versus a break-even estimate. Sales of $217 versus $209 million. What did they give on the guidance? Total service billings growth would be in the double-digit range. That's for the fiscal year. I guess that's a good earnings report, but 3 cents.
I mean, it's hard to get excited about BlackBerry. I mean, yeah, they got some patents. Yeah, they've got some other revenue sources there. Yeah, they're trying to transform the company and trying to figure it out. But, they've had a lot of challenges there. They were, one of your original, back in the day, cell phone, makers here. Everybody had their BlackBerry with their keyboard going. And iPhone ate their lunch and murdered them. That's really what happened. Apple came in, and this is just your classic example. When Apple comes near space, you can have a lot of trouble going forward. Like, if you look at the long-term chart, where's BlackBerry? It wasn't like 140 or 180 bucks at one time.
Oh, nice call here. The all-time high in BlackBerry was made in June of 2008 at 148.13.
When did the Apple iPhone come out?
It was out. It's been out for a while.
It was out in 2007.
Well, yeah, but around there, probably.
The first one was out in 2007, I believe.
So there you go. Apple iPhone comes out in 2007. BlackBerry tops out in 2008 and never comes back. That is all Apple. And then Google and Android and everybody else coming to the market too. But they were your first gun, with the whole screen and the keyboards. And I can remember the BlackBerry Messenger and everybody talking about it.
Yeah,
very popular for a long time.
That's
all it takes.
Apple,
Google come to your space. That's always a sell signal.
Everybody had a BlackBerry, and so everybody had a BlackBerry. No, I was a little bit. I
wasn't either, but I was just cheap.
I did. And then I bought an iPhone, and this is I've told the story 1,000 times. I was the first one in the family to buy one, and I couldn't figure it out. It was just so complicated. So I took it back to the store, went and got another BlackBerry, and then Dana, Emily, and Lisa got the Apple phone and the iPhone, and then they taught me how to use it. But you know what? I don't use 95% of the things that are on there. I mean,
that's okay.
People are looking at their phone all the time and doing, I don't know what they're doing. I mean, I get texts from my wife and my kids, occasional phone calls, and
I check stocks.
Yeah,
stocks
exactly.
And sports scores. I check stocks and sports scores on it. That's I do Twitter too on it, but
that's kind of hard to do. It's hard to do on there.
It's not as easy. If I've got a real tweet or something, or I want to do something, I'm not as good on the iPhone. Some people are awesome at it. I'm not as good either. It's probably because our eyes aren't as good as they once were, Joel. And we gotta look at the little screen.
It's hard to pick. So, I mean, this stock is trading up 20 cents at 11.90. I'm just looking. I mean, there's a bunch of lows. I can't tell you like 11. I just go 11.50. If this takes out 11.50,
Good call.
Yeah, that's
hold 11.50.
Hold 11.50. It's trading up 20 cents here. Resistance, you got a pair of highs just over $12, 12.06, 12.09. So
I'd say exactly the same. It needs to hold that level. As long as it holds 11.50, you're okay. But this is one that could all of a sudden be up in the pre-market, start to take out the opening print, start to take out yesterday's price, start to take out that 11.50. Could be back at $11. So as long as it stays above 11.50, there's an argument here that you could play it. But I would not want to own this below 11.50.
All right, and we had a couple earnings reports this morning as well.
CarMax, we can go there. KMX, that was just out at around 7:30.
Yeah, let's do it.
All right, KMX Q1 EPS $1.33 versus $1.24. Estimate sales $4.79 versus $4.59 billion. So nice Q1 for KMX.
Right back up, and we're trading just above. Is this all-time highs or just the highs?
Yes, sir.
No, actually, go back 77.64 back on 2017.
Oh, nice.
So almost. I thought it was too, but so you got some bogeys up here. You got some overhead supply up here. Again, it's going to be an overall market issue for a lot of these stocks as well. What happens here with the S&Ps? I've already said at the top of the show that I'm somewhat skeptical of today's rally, and I'm probably fading today's rally as a day trader. Now, the question is, if we continue to go higher, and we have a lot of catalysts to go higher here too, don't kid yourself. Stress test results came out last night with the banks, which we'll get to in a second. We have the Russell rebalance today, which always makes the market wild, especially at the close. So that's, one of the biggest trading days of the year, as you obviously got a lot of stocks going into the index, a lot of stocks coming out. Those stocks will all be wild at the close.
So I have a question about that, Dennis. So
yeah.
if the rebalance is actually made after the close today, does that mean that all the funds that track said indexes, they have to buy before the inclusion is official after the close, or
they try to buy it as close as possible,
like Monday morning?
Yeah, it's as close as possible. So there's a lot of factors, and I've traded the Russell rebalance for years, and our traders, specialized at Bright Trading the Russell rebalance. And I can tell you 10 years ago, it was a slam dunk. You bought the ads and sold the deletes, and you did this like sometimes some of the traders did like a month before, and they would just trend.
Well, they announced it.
And, a lot of the other ones just do it that day, and it was a slam dunk, and they'd all have their best trading days of the year because the ads all go up and the deletes all go down, and it's a party, and it's just easy money. That's the way it was 10 years ago. Nothing is easy anymore. Why? Because it's predictable, and trades get crowded when they're predictable. And I can tell you, I have seen instances where, shockingly enough, you have all these ads that are supposed to be added into the index, and you think, well, they got to go up because these institutions got to buy them. Well, it just so happens there's just too many people who have already bought those things, and they actually can overpower because all these other guys that bought it want to sell into these guys too. So if you get the people who are playing, and obviously, going along with the flow, if they get bigger than the institutions that need to buy these to track it, the stocks can actually turn around and go down. So the ads can go down. So I have seen instances where the ads get killed right, a few minutes before the close, and the deletes go up before the close. I've seen that happen. It is one of the days, and actually I had a Reuters reporter call me a couple of days ago about it. And if you Google, I'm quoted in the Reuters article there overnight, because it just got published there last night. I was saying there is days where the ads, you've got to just go with the flow on these days. And if you see the ads kind of leaking into the close, it usually gets worse. And if you see the ads starting to go up, they usually get better. So you kind of go with the trend of the ads that day. And you can get those, just go to the Russell site, Russell Rebalance. You can get a list of all the ads, all the deletes, all the stocks going into the index, and and track those. And it's all the smaller caps, but there's the rebalancing on some of the bigger ones too. So it's good to be aware that stuff is happening, but it's not just a slam dunk to buy the ads and sell the deletes and collect the money. It doesn't work that way anymore. It was 10 years ago, not anymore.
Yeah, I know you're not playing as much. Wow, what stock were we talking about that you got off on that tangent?
Spencer took me on the tangent.
Well, Spencer on
we'll
a
blame
tangent.
Spencer.
CarMax.
Usually it's me taking you on the tangent, but he asked the question.
Yeah, but
we're talking about CarMax.
I'm bringing it back now.
Over there
yeah, Dennis, could you let me know, like, when you go on a tangent, if it's like I have time to like go to the bathroom. I have time.
You like my tangents. You're not
to-
going to listen to my tangents.
Do I have time to go get
Is
a
that
sandwich?
it? You don't listen to my, when I go on a tangent, you don't listen to it. Is that what you're telling me here
I just want to know, like, sometimes I don't have breakfast. I could go make an omelet or something. And then
My
come
tangents are important, Joel. You need to listen to my tangents.
Okay. CarMax making a new all-time high here. KMX, let me take a look at that. It's trading at the highs of the pre-market session. Dennis gave you a good level there, 77.49. That is your pre-market high. Oh, blowing, what is it? Boom, boom. Former all-time high was 74.46. So that could be former all-time high, I'm sorry, is 77.64. So there's your level. That's what you're breaking into. Dennis, couple stocks in the chat here. Glu, Gluu. Are you still in that one, or
Yeah,
did you get out of it? Yeah.
No, I am long Glu. I'm still in it. Somebody's painting the tape or something's going on here. It's up to 728. I bought Glu Mobile, and this is, just because online games, and this is to make apps that make games, and I'm just a big believer. I've talked about esports. This isn't really an esports play, but it's a video game play. And I just think anybody who's making video games right now is going up. I bought Glu Mobile back, or actually right when it broke out. You can see back at the end of April, it did the little breakout through 450, and I was like, I like it now. It's breaking out. I like it. And I bought it back then. I recently sold half the position. Why did I sell half? Well, because it's gone up 50 or 60, I think 430, do the math, 660. Yeah, I'm up like 50% here in a month and a half. So you're saying, Joel, about the horses and the gifts, and
yeah, there it is.
Gift horse in the mouth. So I sold half. I'm still holding half my glue position.
How long is how long is this
But-
going to take out target? This has been I feel like this has been a takeout target for like.
Is there news right now?
No, there's no news. I just feel like every time I hear about this thing, it's they can get taken out. Watch out! Everyone I know who's
I would like it if it got taken out.
I bet you would. I just feel like every time I hear about this thing, it's mentioned as a potential takeout target, and then it never actually happens. I don't know.
Okay. Technically speaking here, someone's painting the tape a little bit here. They got that 728 print, though. I really like it if it gets through the last two high, the 2 out of the last 3 sessions, 672 and 674. So we'll see what happens. I don't think it's going to open up here, but definitely bona fide breakout over 675. Dennis, going back to yesterday, we got a question here on the Intel news, and
right after we stopped the show, after 9 o'clock.
Yep. I mean, that guy did a good job with the company. I mean, how can you argue that? I mean, it's gonna be tough to replace.
It's funny how it spiked too on the initial report.
Yeah,
they get some guidance in there too, so the guidance was okay. Then they just hit the sell button and they didn't stop all day.
Yeah, $52 is really important in this, folks. Yesterday's low, 51.94. Your 3-day low, 51.88. We're only trading up. We closed at 52.19. So I fear another leg down under 52. I think this thing's in trouble. Let's see if it can even stay green in the session. It's up 42 cents. Yeah, you are shorted?
Yeah, I'm short the pop. I think there's going to be, and it's just a classic fade. There's multiple reasons and why I'm short it, and well, obviously red hat one reason, but I think tech could I still think tech could roll over here a little bit today. So I'm skeptical of the rally. I'm selling into this rally here this morning. Full disclosure, that's just what I'm thinking here. And I think there's some people who got caught yesterday that are willing to sell. So I think path of least resistance is down. I think this morning's rally is a gift.
Okay. One other stock coming out of the chat here, Autodesk, and let me see who this is coming from. Let me look. Is it TJ Mosley? I don't know. Anyways, they're asking about playing options on Autodesk. I'm going to assume, since we got a retail crowd here, that it's going to be we think we have a retail crowd here. It's going to be on the long side. I see some decent support at 136. You had 2 lows there, 136.15 and 135.58. So call 136 your support. First big down day after making new all-time highs. I think you may be able to get this stock a little bit cheaper. Dennis, any thoughts on Autodesk?
Again, it's a tech stock. I think tech topped out 2 days ago. And I think, that we could have a little bit of downside here. I mean, this isn't one that's been really run up a lot, so it's not going to sell off as hard as some of the other stuff. But I'm concerned here. I like my 2-day move. So let's just stop for a second. You know how I like the 2-day move. And my 2-day move is when you get an outlier move, you know, and it's going against trend, it usually follows through the next day. We are not seeing that here this morning. We are seeing, you know, a lot of stocks bounce back. But I'm skeptical because of, you know, that rule that I've got in place where when I see the outlier move, and it is, I mean, a lot of these tech stocks have been going straight up for days. We finally got, you know, a red candle here on a lot of them yesterday. So I think it often gets a second day where it follows through. After the second day, then the jury is out, and you got to figure, you know, if it comes right back after that, then, you know, the original trend can continue. If you continue to go lower after the second day, that's where you can concern. But I just got some problems here. You know, I just think everybody got a little bit too bullish here. You know, even myself, you know, I've been playing all these Momo plays, but the IQs and the HUYAs and the SOGOs, those all got murdered yesterday. And not patting myself on the back here, but, you know, I don't do it very often. I mean, I've been calling the top on these things the last 3 days. We've been listening to the show. I said 3 days ago, I think they've all topped out. I mean, SOGO was $15 when I said that. BILI was like 20 and a half or $21 when I said it's 16 now. So, you know, we're not seeing exactly the same thing in the text, but Square finally had a red candle yesterday after going straight up. You know, it's showing, you know, when you see these, you know, little Momo plays like that, it might scare away some of the Momo traders and the bigger stuff as well. And I think that's what started to happen yesterday, but it's very early here yet. So when you see Square trading right back up to, you know, $1 off yesterday's high and starting to get back up there, I think it's an opportunity to potentially ring the register, because I think you have some nervous Nellies in there now where you didn't have them before. Now you do. And the nervous Nelly will hit the sell button at the first, you know, sign of, you know, something going sour. So that's why I'm skeptical on today's rally.
All right, let's talk about this sales tax stuff that happened yesterday. That Supreme Court decision that ruled that states are now allowed to collect sales tax on e-commerce transactions. The overruling of the previous judgment from '92, I want to say, and I think all the e-commerce stocks got hit initially, but it seems like the prevailing sentiment is that this won't have a negative impact on Amazon and the other larger players in the space. The smaller e-commerce companies are the ones that could really get hurt here. But I think I've seen several, I guess, experts now come out and say that this won't have a negative impact on Amazon. I think they did initially get hit on this news, though.
And there was a lot of tech stocks that got hit yesterday. I mean, if you were saying anything, like you were saying, you know, just another tangent will take you on there, but, you know, you gave, you know, the stamps.com thing yesterday, Spencer, you know, yeah. STMP, let's just go on that tangent. What was that news headline yesterday? And they had it hard.
That the government Trump's trying to make potentially, or they're going to try to reorganize the postal service, but no one can really say how. I don't think there is a how yet. I think it was just that they're interested in exploring ways to change and reorganize the U.S. Postal Service, which would theoretically, I guess, impact stamps.com. I don't know how. I couldn't find anyone who said how, but stock got hit regardless. So.
And a victim, both of those stories there, why I went on this tangent is, you know, you've got stories where you can always, you know, find a negative headline if you're looking for it. And sometimes it's maybe, you know, as a negative headline. And Joe was giving an argument, which he can give in a second. But, I mean, on a normal given day where the market's going higher and the Qs and everything is trading up, story like this breaks, it probably doesn't get hit as hard. But they wanted to sell stuff yesterday. They were looking for reasons to sell stuff. And if you were saying anything negative yesterday, you got hit hard. And STMP, you know, maybe it's, you know, a story, you know, outside the company, but, you know, it could impact it. They took that reason to sell it. Its stock has been going straight up for 3 months, and profit takers came in hard yesterday, and the stock lost 30 points.
I actually think it's possible that yesterday's ruling ends up being good for Amazon and good for eBay and Overstock and the bigger players, because it will snuff out their competition essentially. It could essentially just
in the long run, maybe all these things, you know, are going to be, you know, and Amazon, you know, you can't argue with Amazon. They always seem to find a way. I mean, every time you've shorted this thing long term, you've had your face ripped off. So I'm never going to bet against Amazon in that regard. But yesterday's candle, they wanted to sell. They wanted to find a reason to book some profits. They found it. Stock did have a little bit of a whoosh from 1760 to 1720. We haven't talked about the whoosh yet. We will in a second. But, you know, that's, you know, telling me that, hey, now we got a few people caught, and that makes it interesting as a short.
The only company that I'm sorry, go ahead, Joel.
I was just going to say, I mean, the U.S. government considering selling stamps online. I mean, would that be part of the reorganization? I mean, that's I don't know if they already do, but seems to me that would like put this company out of business potentially, right?
They got other sources of revenue,
yeah,
though.
they got other
Not,
sources.
Spencer?
You know what? I'm not positive. I thought they just did stamps and shipping.
Yeah, when I looked online, I mean, yesterday's low is 42.
Is this pets.com?
We are looking.
I don't follow the story close enough, so
Not much of a bounce here, considering the shellacking it took yesterday.
Oh, it's not traded though. So
it hasn't.
It's not really traded at all. It's only traded 167. The spread right now is 248 to 260. So it's probably going to bounce a bit, but.
All right, they must have said something at OPEC here. Oil is just taking another strong leg up here, up $1.71 at 67 and a quarter. Holy moly, there! And I mean, they're talking about increasing output, but I don't know if they're changing their mind or not. We got a huge rally going on here. Not seeing much. I see a 67.13 high on June 1st. We have taken that
Talk
out.
about tangents. We're talking stamps.com. Now we're talking about crude.
It just exploded.
How did you take us on this one? You make fun of my tangents.
Because I'm looking at
How did we end up in oil?
Because it's moving, Dennis. Are you watching it? We got the movers here. But just keep it. I mean, it's moving and it's providing support to the S&Ps. 67.13 needs to stay above that. Let's see what they do. Not much.
I think the story,
67.13.
the headline is that they've agreed to oil production levels starting next month. Is the first sentence of the CNBC story that I'm reading right now. But it was actually a Reuters report that originally broke it. So this is from Reuters saying that they have agreed to, I guess, curtail production in July.
Stay on 67.13. If you're long, keep an eye on that number. If not, we could get back up some of those gains. All right. I'm going on so many tangents. I'm even forgetting where I was at.
Let's go back and just a couple questions there. There was one from the chat.
Okay.
And I was going to say something else. Oh, I want to talk the whoosh eventually here too. But first, I'm going to address Iceman's question. He says, Dennis, do you have a set profit target per day or week? If so, how do you set it? And do you stop trading when you hit the target or keep going? I do not have profit targets. I mean, I'm doing a lot of stat ARB stuff. I'm trading so many stocks. And like I said, and on a lot of given days, I'm trading 100 or 200 trades. So I'm trading a lot. I'm trading, continuously. Although, like I said, I don't trade typically, middle of the day because it's too much chop. I'm very active pre-market, very, very active at the open, very active at the close, and very active after hours. Middle of the day, it's like chop fast. I don't really trade that because you get chopped up too much. So I don't like 11 to 2. I don't like those hours. I usually take time off during that time because, if I traded the entire pre-market session until the entire after-hour session at 8, I would be like a zombie trading 16 hours a day. So I need some time off. And believe it or not, usually I take that time off in the middle of the day, 11 to 2. It's harder hours to trade. So I don't have any set profit targets. I mean, I got an idea what I like to make. And I'm disappointed if I'm not making. I can tell you, just looking, I haven't really analyzed my stats ever very closely, but I can tell you that I'm usually profitable 4 out of 5 days. So I would say I'm comfortable saying that on 4 out of 5 days over my 19-year career, I'm usually profitable. Back in like the years 2001, 2002, believe it or not, I had, months and months where I wouldn't have a losing day. That's not the case anymore. The market's a little more volatile. It's more unpredictable. We're incorporating a lot more risk into some of our strategies. So you're going to have losing days. And usually I have about 1 losing day if I'm trading 5 trading days. Do I cut it short when I'm having a really bad day? If my head really was out of it, I would say like if I really, had a bad trade, maybe I need to walk away for a few minutes. But I don't think I would ever just stop trading because there's, all of my edges and stuff, are mostly statistical, and they've been proven out from the long run to work. So the more I employ those edges, the more money I'm going to make. So I'm not scared to say that I need to stop trading here at this point in time because I've lost too much money today. The only thing I would take a quick break is if my head was kind of out of it and I wasn't making good calls. So, when I definitely think when you're in the zone, and I have been lately, you need to press, you need to trade more, you need to go with it. If you're not in the zone, you just need to back off a little bit. Usually I back off by reducing my size. So it's a sizing thing. I'll get bigger when I'm trading well. I'll get smaller when I'm not trading well. So it's not a matter of stop trading. It's just a matter of reducing my position sizing. So if I'm in a slump, I'm not losing as much money, if that makes sense.
Okay. What other question? Do you use level 2 for your entries for day trading?
I mean, I've got up all the time. Yeah. So I trade right off my level 2 montage. So if I could show it to you, I've got, the quotes, I've got the depth of book, I've got everything right there on the montage on my buy and sell button. I'm literally one. So if I want to buy something, I click the price and I click buy, and that's it. My defaults, everything's set. I can go from idea generation as a human being. I can go from idea generation where something pops into one of my scanners or filters and I see it. I can usually get it in my portfolio in under 2 seconds. So from idea generation to executing in under 2 seconds. So like making, so I'm thinking in the first second and I'm executing in the next second. So I'm not a machine though. And I ran algorithms for years, Joel, like I ran them for years. And that's just basically not as easy as it used to be. And there are some strategies that I still have algorithms for, and you can still run algorithmically here. But again, it's my pet peeve. I've said it on the show before. I hear this all the time. They're like, people will say, if you're not trading algorithmically, you can't compete in this market. These people, I will say, probably, maybe some of them know what they're talking about, but a lot of them don't know what they're talking about. Because now, if you're trading algorithmically and all of your strategies are just purely based on technical formulas, you're now competing against every other high frequency trading machine out there. I'm trading a little longer time frame, so I can still do very well manually. I traded almost exclusively algorithmically back in 2005, 2006, 2007, 2008. Why? Because there wasn't anybody in the space. There wasn't as many people trading algorithmically back then. I had 2 accounts. I had one that just traded automated, and then I had another one that I traded manually. And I did very well trading automation. So I would say to that person that says you can't trade anymore if you're not trading algorithmically, I'd be like saying, where were you in 2005? Where were you in 2006? Because that's when you kicked some butt with algorithms. My algorithmic system, my pure one, I shut it down in 2010. Why? Because I wasn't making money anymore. And that's, why I've moved all the way back to like human manual trading. Because you know what? When there's a new edge out there, you have this, time frame where if there's an edge that's discovered, if it's going to be an algorithmic edge, it takes time for the high frequency traders to figure out. First of all, they have to discover it. Secondly, if they're not in the game, they're just running their machines all the time, it's hard for them to discover new edges. But they do have people trying to figure out new edges. They figure it out. Then they got to back test it. They've got to run it, implement it, code it. It takes time. It can take weeks sometimes, for them to get up and running on something like that. You find a new edge as a human being, you'll be running it 10 seconds later. So that's why the humans, and guys, chat, believe me, humans can make money in this market. I am almost exclusively trading manually now, and I'm still making money 4 out of 5 days. So don't get discouraged. And if that person says to you, you can't compete with the bots, tell them they don't know what they're talking about, because I do it every single day. You can compete with the bots. You just can't compete on the short-term millisecond time frame anymore. You can't compete, thinking you're going to, make money in arbitrage anymore. You cannot make money market making anymore. You can't make money in ultra short-term strategies, but you can make a lot of money swing trading. We have some great swing traders in our chat. Angie Baby's talking right now, Spinner. These guys, Hunter's in there right now. Iceman's doing well. There's a lot of guys in our chat that are, trading manually,
and girls.
Making money every single, and girls. There's some great girls in our chat making money every single day manually. So don't, get discouraged and say you've got to be running algorithmically to compete in this market. I would say it's very difficult to compete algorithmically. It's actually easier to compete on a human scale. Why? You don't have the competition from the humans anymore either. Look at the trading floor. Look down at the NYSE floor, which is now basically a CNBC studio. You can see down there that there's not as many humans down there anymore. So all of a sudden you have a lot less human competition. There's not as many brains thinking on these stuff. So you know what? Strategies, if you find a nice little edge, those can go undiscovered for a long period of time because there's not as many humans trying to figure them out anymore. People are just, competing, and they're trying to do all the basic strategies that we did years ago. And yeah, those are difficult to compete in. But the longer term, extend your time frame, true day trading where you're holding stocks for hours and not seconds, make a lot of money still in this game.
Another question here about your time frames, Dennis, and you got all kinds.
It was a Q&A session today.
I know what's good. It is, man. I could have went out for breakfast and come back. I didn't even need to go and make it out.
Joel, you and me should have gone somewhere.
Spencer, what are you doing? What are you doing, Spencer?
Tomorrow. On Saturday.
Time frames, Dennis. Time frames.
So at the time frame I'm making trades in?
Yeah, I'm not. Yeah, I mean, you're doing some for a few seconds.
Yeah, a lot overnight. I'm in trades longer. I'm in trades. I used to be in trades for seconds. I would say I'm usually in for minutes to hours to sometimes days. You know, like when I'm in these trades with the chat room guys and the Sogos and stuff. I was in there for a few days. So I'm sometimes it varies. My bread and butter is probably in the hours. I would say, like, I'll put on positions overnight where I like the close, I like the 2-day move, I like whatever setup is there, and maybe get out on the open the next day. Or I'll trade. My openings are different. I'm hoping for a stock to open too low or too high relative to where I've deemed the fair value is. So I get that opening print, and then I usually get out, a few minutes later when it corrects itself, if it corrects itself. If it doesn't correct itself, I usually get out anyways because I'm losing money. I need to get out of that trade either way. So I would say my trades at the open are probably in the minutes time frame. My trades overnight are obviously in the hours. If I'm buying something with close and sell at the open, I'm holding it all night. And I like to play the 2-day run-ups and stuff. I talk about these strategies all the time. And those are a little bit longer time frame. Those can be days. Bread and butter is probably still the open, where I'm trading a few minutes, where I think there's some pricing out to lunch.
Okay, more questions here. What candles do you use? 1 minute or 2 minutes, 5 minutes? I know how you're going to answer this one. I don't look at anything shorter than a 15. Dennis, you like to use the dailies, correct?
You know what? My default chart is the daily. So why do I do that? Because I want to know what the stock is doing. Is it an uptrend or downtrend overall? Because if I'm day trading something that's in a hard downtrend, I'm fighting the tape. If I'm day trading something, I'm buying it long and it's in a nice uptrend, I know the tape is with me. So that's my initial thought. I look at the dailies. And then I'll look at the intraday chart and just, break it down. But, I don't get anything. Tick charts, I never open them.
Oh, drive me crazy. Yeah.
There's too much movement and it's all chop and noise. So I never look at a tick chart, ever.
Okay. All right.
Wait, do we have to talk about? It's supposed to be a news show here.
All right. Let's. George Gotch just got back from his workout, and you were on the same tangent, so he just wanted to throw that in.
I never got off the tangent. So
Okay.
the tangent of the tangent of the tangent. Spencer, take us back.
Should we talk
Come on, Spencer.
Should we talk about
the stress test results?
I was waiting to bring those
I've got
up.
on my list. The list. I've got stress test results to talk about here. I've got ratings to talk about here. Haven't mentioned imbalances
I was
yet.
waiting. All right.
Haven't mentioned
stress test.
anything yet.
Stress
We're
test.
gonna let Spencer
I haven't
take
talked the
first.
whoosh.
I don't even know what the whoosh is.
I invented it just now, today.
All right. Stress
All right,
test.
let's do the whoosh.
I named it, coined it.
Hold on. First, let's do stress test real fast. All 35 banks passed. Credit Suisse had the highest capital ratio, 17.6%. UBS was up there. Santander was up there. The three worst or the lowest ratios were Goldman Sachs, State Street, and Capital One.
And if you look, Goldman is barely trading higher. Capital One here, COF is not traded at all, so we don't have anything there. STT trading slightly down the pre-market, so these do matter. He said Credit Suisse was the best. It is up 3% here, so these results are mattering, and the specific results are mattering. The big thing is they all passed. They were all actually trading down, a majority of them last night, but they have come back here. Next week is going to be big for them too, because it's talk about payouts going forward. Is some of these guys going to raise their dividends? Are some of them going to do potential buybacks? What's going to happen? With this excess, that they're talking here. So that next week will be big on it too. But it's good news they all passed.
All right.
Go ahead, Spence.
No, go for it, Joel. Go for it.
I was just going to say that just that Goldman Sachs chart. I mean, this is it's ugly. I mean, here you are. I guess if you're going to lean on the low of the move here, you had a low at 224.09 on May 31st. And then you had a low at 224.57. You got a nice bounce off there. So there's a level, 2 months in a row, there's a level to lean on here. But this has gone down every month. I had an up month in January and been down every month. So a really poor. That's the only thing that's just keeping this market from
Financials
Yeah, is the financials here. So let's
if
go.
they need this lift. They need to lift on this news.
I agree.
And if they do not lift next week, if they have payouts come out and they start raising the dividends and they start and they do not lift on that, that is a screaming sell signal then. So let's see what they do. I think they could potentially get a bounce, next week. I'm a little bit concerned today on something like the Goldman because Goldman was trading down last night. Pretty smart people trading last night. It was trading down heavily hours. It's coming back here this morning. But, you were saying, Spencer, they were near the bottom of the results. So I'm a little concerned on Goldman. Some of these other ones like Wells Fargo trading higher. Some of these other ones, that did better. Credit Suisse are trading significantly higher here. So it looks like there may be some that actually underperform today. Next week, let's see what happens with these payouts. Let's see what happens when we get more information. If they start jacking the payouts and the stocks rally, that's good news. If they start jacking, they rally and then fade, be careful. So there's still something, going wrong with the banks. I remain bearish the banks overall here. They're in a downtrend. I still think the Deutsche Bank and European bank factor is still an issue. Despite Deutsche Bank holding on, it's up here again this morning. It's just hanging out around 11. Been hanging out here a long time, though. I think there's still some underlying issues here that are still to come out, which could lead the banks lower.
All right. What is the whoosh that you keep mentioning?
Okay. So bring up the chart, and this is what, bring up that chart of Amazon yesterday.
Okay.
Yesterday's intraday chart of Amazon.
Right.
And this is what I look for. I never coined it before, but when I'm trading, momentum stocks, or when I'm trading something that's a little bit more wild, and it's been going straight up for a long period of time, I'm always kind of eyeing up the whoosh or the flush. Maybe flush would be a better word for it. I kind of like whoosh, though. I don't know. It sounds better than flush. Anyways, like the whoosh or the flush where everybody says quickly, they start selling. So if you look at yesterday's intraday chart, you can see I'm looking at the time of just after the open. It opened up and then it just flushed. That whole literally that first hour. We went from 1760 to 1717. We lost 50 points basically in a short period of time. That's like the flush out, the whoosh, whatever you want to call it down. What do you think we should call it? I'm trying to name it right now. This is my own theory.
Flush is nice.
Flush? Like the flush? Do you like the flush or the whoosh? Chat, I'm going to maybe write this up sometime. Like flush or whoosh? Flush makes more sense. It's easier. Whoosh is like, oof.
All right. Finish the point.
Flush is like you think of the toilet.
Okay,
so
finish the point.
You think
of the toilet, so it kind of makes sense too. Anyway, so it whooshes down very quickly. You caught a lot of people there that'll like, I just bought this at 1750. Now it's at 1720. I need to get out of here. So it's caught people long now. It's caught short-term traders long. So on rallies, those traders will usually want to try to cut their loss as best they can. We saw this classic yesterday with Amazon. Got up, came up 1740.15, and sellers came back and emerged. Tried to rally back 1740, sellers came back and emerged. It's rallying back up here this morning, but sellers probably going to be 1740 to 1760 because there's a few people who were buying and chasing it basically all day on what would have been Wednesday and at the open on Thursday. Those people are all underwater. That's what you look like, is those people to shake out. And that's, initially they shook out some of them, but you look for that extra shakeout. So that's kind of the little whoosh. I saw this on HUYA. If you go back to the chart from 3 days ago, it's why I said I thought the top was in. So I don't know if you can show that far back, but you can see HUYA back, I think it was on
Wednesday
in 2021. Was it Tuesday? When it went from $50 down to like 42 very, very quickly. Can you show that? He's trying
Tuesday.
to show.
Yep, that was Tuesday.
Yeah, so it went that day. You can see in the initial, we went all the way up to like 50. What was the high? Let's go.
49, 50,
49. And then boom, like they flushed them out here in the first like hour. You can actually see it actually went all the way down, I believe, to 44. It was a pretty good flush there. And then, bounce back and try to come back and can't. Try to come back and can't. That's where I'm saying there is now some people who were chasing this, and it's been going up for a while. People have been chasing, but now we've caught a few people. It is now down significantly. Can they come back from the first initial flush? Sometimes, but it all depends on, can it come back that day or does it stay down? And if it can't make new highs, and it didn't the next day and it didn't the next day after that, that makes you think that this might actually hold. SOGO was another one too. We've been talking about it in the chat. 3 days ago, got up over 15 and then flushes down to 14 very quickly. Kind of chops around for a couple of days, but can't make new highs. And now what happens yesterday? it flushes them again. So that's what you're looking for. That is how I identify the turning point a little bit quicker than maybe some other people. It's not always going to be right. Some people want confirmation. It's good to get confirmation where you see, okay, 2-3 days we haven't made new highs. This definitely could go down. But, if you're looking for that initial signal where caution, looking for the word caution, look for that initial turn where you see the stock in a hard uptrend there. It's going up 10, 11, 12, 13, 14, 15 bucks. Now all of a sudden we lose like 20% in a matter of an hour. That is, and if we don't get it back, sometimes it comes back, but we don't get it back there in the next day, that's cause for concern. And if it's struggling to fight to get back to those highs, it's telling you there's other people who are caught here and looking to get out. And then they have everybody who's bought 11, 12, 13 saying, I want to book my profits. And we're not making new highs here. Now I have an excuse to get out. So it's a little combo factor. I guess you want some confirmation, but the initial signal is that first whoosh. And maybe you want to see follow through the next day where it's not making new highs again. And then that gives you confirmation that maybe, hey, the high is in.
All right. Thank you for that explanation here. It is 9 o'clock here. I'm going to wrap things up. Taking a look at the S&P futures, trading up 14 and a quarter at 66.75. Your pre-market high 68 and a quarter. I'll tell you, you get through Wednesday's close at 27.72 here off the hop. And I'm a believer in this rally today. If we cannot take that level out, start to fade a little bit, really not much until you get mid-range on the session at 27.60. So we'll look for that early follow-through. Dennis, great job today. Really helping people out. There's just a bunch of compliments in here, giving people ideas how to execute different trading strategies. So thanks a lot. Spencer, you want to wrap up today's show and preview Monday's broadcast?
Sure. And before we go, I'll just run through a couple of ratings real fast. I caught my eye. Dollar General caught an upgrade at RHT from outperform to strong buy, screaming strong buy on Dollar General there. That was the biggest upgrade that I saw. That wasn't earnings related. As far as downgrades go, we got downgrade at Nike at Buckingham to neutral. Booking downgrade at Benchmark to hold. And Red Hat downgraded to neutral at BTIG. Also saw a Valiant downgrade to sell, I believe, from TD Bank. And those are the biggest rating changes that caught my eye this morning. But that's going to be it for our show today. So I hope you guys enjoyed the content today and all week. If you want to catch the podcast, you can do so on iTunes, SoundCloud, Stitcher, TuneIn, and now I believe the Google Play Store. If you have Android, hop on the Google Play Store. We should be there as of yesterday. Or go to YouTube and just rewatch the show there. But thanks to everyone who joined us in our chats today. Love the inputs, the questions, the answers, the talking. Love all of it. Premarket.benzinga.com if you haven't joined our main one that's active throughout the day. Thanks to our YouTube chat as well. Hope you all have a good weekend, and we'll see you guys on Monday.